So many great viewer questions for today's Finance Friday. Let's get right to them with Dave Schurman of First Ontario Credit Union. It's awesome, Dave, to see so many viewers engaged with this.
Absolutely. Love the questions.
Okay, let's start off with a question from Tammy from Hamilton. She asks, I've recently sold my house, and after paying off the mortgage and fees, I have about $240,000 left. They're renting now, but will be buying a home at some point. She says, I don't want to get hit with high taxes. So what are the short-term investment options that we can easily access the money when it's needed?
Well, again, great question, Tammy. Very common. In fact, the best tax-free investment you can make, you've already made, and that's in personal residence. So you've just sold your home. We're lucky in Canada that we don't have to pay tax on our personal residence. So you've just gained $240,000 tax-free. So fantastic on that. So what do you do with that? Because you're going to need the money, as you said, in a short period of time when you rebuy. So unfortunately, anything else other than a personal residence, we're going to either pay tax or capital gains on. Other than something registered. So then if you look at the registered deposits and RRSP, not a great idea for this one, because although you'll save tax going in, you're going to have to pay every bit of tax coming out. So not designed for that. Then you could look at a tax-free savings account. If you have room, I would pile as much as you can into both yours and your partner's tax-free savings account. And then what type of investment will you put in there? High interest savings account or a GIC. Interest not going to be great on those accounts, but you're going to get the money when you need it.
Okay, next question is from Lucy, who lives in Welland. She is 63, single, and she says, I'm retired with a pension, and I have $100,000 in RRSPs. She owes $210,000 on a home equity line of credit at just over 3%. She says, my home is valued at $700,000. I'm paying interest only, so I have enough money for travel and expenses. When I sell my home, I'll pay the line of credit off with my two daughters can share the remaining proceeds. She asks, is this the best course of action, or should I lock in the mortgage at a fixed rate? And adds your advice, it's much appreciated. Thank you, Lucy.
Yes, Lucy, great question. And you know, what you're doing is the same as a lot of people are doing when they have a home equity line of credit, paying the interest only. The principal is not reducing, obviously, but the value of your home is going up. And in your case, again, as you said, you want to use the extra money to travel and live. So that's fine. The downside on this right now is interest rates are going up, and with a line of credit, a home equity line of credit, your rate is tied to interest rates that go up or down. So, you know, right now I did the math. You're paying about $530 a month in interest only. Again, principal not reducing. If rates go up to 5%, your interest payment is going to go to about $900 a month. So that's a big jump for you. Might not be a bad idea to fix that line of credit into a 5-year fixed mortgage at the best rates you can. The payment would jump to $1,000 a month, but again, only $500 of that is interest. The other $500 would be reducing your mortgage, because you have to pay a payment on a fixed term mortgage. An idea might be to get your daughters to pay that extra $500. So your interest for the next 5 years would be the same, $500. And what your daughters are paying on the other portion, the principal portion of it, they're going to get back anyway when you sell their house. So it actually wouldn't cost your daughters anything. So you might want to talk to your daughters about that.
Okay, we have one last question, and actually, Dave, because I don't think we're going to have enough time to answer it properly, it's from Janet of Stony Creek. How about we save it for the next Finance Friday? It's a tax question as well, so that way it doesn't cut her off there. So great questions again, and great answers from you, Dave. So if you have a financial question or topic you want covered by Dave, email your questions to financefriday@firstontario.com, or get in touch through Twitter at finance_Friday. And if your question or topic is covered on air, you'll get a gift card from a local business in your community. Have a great weekend, Dave.
All right, you too, Annette. Take care.